Okay, good afternoon. I'm Mr. Bernier, the Chief of Financial Sector Development Division at the Arab Monetary Fund. On behalf of the Arab Monetary Fund and UNFIF Digital Monetary Institute, we would like to welcome you all, distinguished speakers, regulators, banker, fintech leader, and guests to this exciting conference on Spearheading Digital Innovation and Cross-Border Payment, Arab Cbdc Conference. It comes in the context of a rapid development of cross-border payment, both globally and in the region. And we are delighted to bring in different expertise to address the current challenges to boost payment innovation across the Arab region. We have a very long agenda, in fact, and without any delay, allow me to invite His Excellency, Dr. Abdulrahman Al-Hamidi, Director General, Chairman of the Board of the Arab Monetary Fund, to deliver his opening remark. Dr. Hamidi, please.
Thank you very much, Yusur, and very good morning and very good afternoon to all of you wherever you are. I wish you all, your families and your loved ones the best of health, and I really hope that next time we will see you here in Abu Dhabi. It is my great pleasure to be here with all of you today at this very high-level conference to speak about digital innovation, cross-border payments, and exchange views on digital currency. Before starting, I would like to extend my appreciation to UNFIF for the cooperation in organizing this important discussion. Special thanks go also to all our distinguished speakers and participants. Please be sure this is the first but not last. We are going to have so many activities together ahead. As an introduction, digital innovation has been the theme for a while, and especially during this crisis. But what we are seeing in the last few years is about how innovation can improve financial markets. In this context, the AMF is actively working with the Arab central banks with the objective to see how innovation can help improve the way we carry our own mandates. What challenges we want to resolve with CBDC? And by the way, I will be raising more questions than answers. We have seen over the last few years a number of initiatives in payments and digital currencies. And what we need to ask ourselves today is about challenges we want to address with such initiatives. What are the real use cases that can add value? What are the gaps? What inefficiencies we are trying to address? I think the three big use cases are: first, in cross-border payments, especially retail payments and remittances, which is currently relatively large and probably inefficient and costly. Second, financial inclusion. And what we are seeing here is the digital tokens and mobile are providing the opportunity for cross-border payments to be made by all. Third, I would say that well-regulated digital currencies with enough visibility and right public policy that governs this infrastructure can be an opportunity to increase compliance, particularly in a cross-border space. Having these use cases in mind, is CBDC necessary? Can other payment initiatives, platforms help realize similar benefits? Basically, and within the central bank community, there is a lot of progress that have been seen recently as they are upgrading their payment systems, moving quickly to real-time payments infrastructure. And the next step is about when and how CBDC as stablecoins would be an alternative. What is its biggest advantage? Basically, it's about having technology supporting streamlining cross-border payments that helps reducing the cost and increasing the speed of payment flows. Within this in mind, I would ask if the priority for the global community is CBDC, which might come in due course in different ways, or is it about improving cross-border payments, particularly for developing economies, which would promote financial inclusion and empower growth that would help achieving the SDGs. When we talk about cross-border payments, Buna comes to mind, and I'm sure you have heard about it. Actually, Buna in our language, Arabic, stands for infrastructure. And indeed, Buna is a financial market infrastructure. More precisely, Buna is a payment system, and it comes as no surprise that it carries all the characteristics of a payment system. In fact, within the context I described, the Council of Arab Central Banks governors has initiated this important project implemented by the AMF with a strong belief that cross-border payments is essential to empower Arab economies, strengthen integration between Arab countries and within the global economy. Puna, which has been designed in line with the global standards and built on the latest technologies, constitutes a tangible and concrete contribution to the G20 agenda by delivering a centralized, multi-currency, cross-border payment system that promotes best standards and increases the level of compliance in the region and beyond. Today, we have 6 currencies under the umbrella of Puna. My colleague, Mahdi Mana, the CEO of Puna, will provide more details on the issue. In this context, what prospects for digital currencies? Let us come back to the digital currencies and focus on challenges we want to address. Well, when central banks issue digital currency, they can distribute this currency, as you know, in 2 ways. One is wholesale CBDCs through existing banks, or retail CBDCs going straight to the consumers. That's being said, there is an interesting hybrid model around enabling not only banks, but also wallets to have access to digital currency. In our region, some countries are now exploring CBDC at different stages. But let me tell you that the official and reporting currency of the Arab Monetary Fund is the Arab Accounting Dinar, in a digital form as unit of account. Given its legitimacy of usage for funding schemes by the Arab countries, it could be a credible option to explore further for use as a digital currency, probably to enable more efficient settlement between financial institutions and central banks in our region. To conclude, let me emphasize the importance given by our region to financial technology in general. The region is moving fast into digital financial era. We at the AMF have recently issued several guidelines and notes relating to fintech industry, including a guide to Arab central banks to deal with CBDC. Once again, on behalf of the AMF, I would like to thank you for your kind attention, and thank you very much for being with us here. Thank you.
Thanks, Your Excellency, for this comprehensive opening remarks. Allow me now to invite our partner, Mr. Phil Middleton, the chairman of UNFIF Digital Monetary Institute, to deliver his welcoming remarks and take over and move into the first panel discussion. Mr. Phil, please. Yes, the floor is yours. Go ahead.
Thank you very much indeed, Issa, for that introduction, and thank you, Your Excellency, for that excellent scene setting for this conference. I think you covered a lot of very, very complex issues extraordinarily astutely, and you have set the stage for us. As Issa says, I'm Philip Middleton. I'm chair of the OMFIF Digital Monetary Institute. It's a great honor and a great pleasure to be here in partnership today with the Arab Monetary Fund. Would that we were physically in Abu Dhabi. If nothing else, the weather looks significantly better than it does here in the Welsh Mountains where I am. And we do look forward to continuing this partnership and exploring the themes of cross-border payments, digital money, and so forth in the future. We today, in addition to a very distinguished panel or panels of speakers and commentators, we have an audience of around 800 people from around the world, not only from the Middle East and the Gulf region, but also from as far afield as California to the west, and Japan, Tokyo to the east. So welcome, good morning, good evening to all of you. Delighted to have you with us, and hope you will engage with our speakers via the chat box. If you send questions in, our team will ensure that we get those to our participants. OMFIF has been dealing with central bank digital currency, digital payments issues for about the last 4 years. And 4 years ago, this was a very esoteric subject indeed, particularly CBDC, central bank digital currencies, cryptocurrencies, and stablecoins. It was the preserve of experts and what we might call nerds, and certainly governors and deputy governors didn't get involved with it at all. Over the last 4 years, and particularly in the 18 months of the COVID pandemic, the question of digital payments in general and CBDC in particular has shot right up the agenda to the point where it is now central in most governors' offices and indeed most Minister of Finance's offices around the world. The last time we looked at OMFIF, over 100 central banks worldwide are looking at elements of central bank digital currency, be that retail or wholesale, stable coins, cryptocurrencies, regulatory implications, operational implications. So it's gone from being a labor of academic love to a major piece of policy and policy initiative for central banks around the world. And that's attested to by the panel and the audience that we have today. I can remember 4 years ago where it was difficult enough to get a seminar in a telephone box to discuss this subject, still less 800 people around the world. So welcome. In the next 3 hours or so, we have a packed program. Let's just remind ourselves that the last 2 years have seen a massive acceleration of this topic around the world. It has, the COVID crisis in particular has accelerated a move towards a digital economy. It has accelerated the progress of financial technology, fintech, and more importantly, perhaps, decentralized finance, so-called DeFi. We have seen a decline in most parts of the world in the use of cash, growing questions about the robustness and suitability of payments infrastructures, particularly cross-border payments infrastructures, but also domestic ones, for the demands, the new demands of the economy. And we've seen an awful lot of thinking and work on CBDC, both retail and wholesale, on stablecoins, how they move, and on crypto. So a whole range of topics for us to deal with, and I am now going to move on to our first panel of the day on national retail payment strategies and fintech and CBDC implications here. I'm very pleased to be joined by His Excellency Ramoy Abdul Naga, Deputy Governor of the Central Bank of Egypt, His Excellency Bara Al-Khabi, Vice President of the Central Bank of Oman, an old friend, Dr. Wolfram Siedemann, Chief Executive Officer from Gieske and Devrient, a leading technology firm with some very innovative ideas about CBDC. And last but not least, Salvador Perez Galindo, who's the Vice President of Government Engagement for Visa in the Middle East region. And Visa as a global payments network needs no introduction at all. So we have an hour or so, gentlemen, to consider a range of topics. And I'm going to start by asking the central bank governors. I'm going to start with Dr. Naga from the Central Bank of Egypt to give us a view on what is the Egyptian Central Bank's thinking around its national retail payment strategy, and in particular, what's the outlook for cash in Egypt, particularly, but more broadly around the region?
Thank you very much, Phil, for the introduction, and allow me first to thank our esteemed participants and panelists. I would like to thank OMFIF and the Arab Monetary Fund for organizing this very interesting panel. Of course, Dr. Abdel Rahman Al-Hamidi and Mr. Yasr, I thank them for the arrangements. Of course, this is the topic of the hour, and there's no doubt that, as you mentioned, a few years back, the central banks and the ministries of finance were not as concerned, perhaps due to lack of promotion around this topic. However, today and over the past couple of years, things have taken a completely different route, and there's no doubt that COVID-19 has also sort of reshaped the environment and has forced us to rethink, what needs to be done and how the ecosystem is going to inevitably change to accommodate for all the potential remoteness that has ensued itself and imposed itself during the COVID crisis. For us, really, at the Central Bank of Egypt, we had, prior to COVID, had very ambitious plans to start to embark on a journey whereby we would have a lot more of the excluded strata in the society become more included and to have more access to financial services. And that was definitely a big challenge. But I think the good thing is that the infrastructure we started laying back then has helped us really brace ourselves for COVID-19. And that's why the way we saw things is that COVID-19 is an opportune moment to really kickstart and really add more momentum to a journey that we had embarked on before then. We are, as a central bank, we are really sparing no effort to move towards a less cash society. This is how we prefer to see things, because we think it's too perhaps ambitious and unattainable to think we will reach, at least in the coming years or the short term, a cashless society. So with the environment that we operate in, the fact that we have an informal sector, a sizable informal sector in Egypt, in some cases not or suboptimal financial literacy, makes us think, you know what, we need to have a more objective target, and that's why we had decided that the right sort of mode of operation is to always think of a less cash society. Of course, there will be, we think that the share of cash will decrease against the increase in digital transactions in the coming few years. We're working towards that. The direction is not merely a central bank of Egypt direction. I think it's a collaborative approach that the country is undergoing to achieve a less cash society that was demonstrated in the establishment of a National Payment Council that is headed by His Excellency the President Abdel Fattah al-Sisi back in February 2017, with the objective of reducing the use of banknotes outside the banking sector and to support and stimulate the use of digital financial services. The National Payment Council defined 6 imperatives to reach that goal. To start with, develop a secure, efficient, and effective national payment system and this oversight framework, and to reduce the risks associated with its operations, to achieve progress towards financial inclusion with more citizens from the formal and informal sectors enrolled to the banking system, to protect consumer rights, reduce the cost of payment services, and to finally achieve a competitive payment services market and oversee the existing entities in the market. The strategy led by the Council had a significant increase in the percentage of electronic transactions adoption over the last year, where the value of transactions had increased from £1.9 trillion to £2.8 trillion, with an increase of almost 50% in the transaction value and around 43% in the number of transactions that increased from 700 million to 1 billion transactions. So this is, in a nutshell, our view on the role of cash in the economy. Of course, we can go on forever, but in the interest of time, I will pass it back to you, Phil, to ask further questions.
Well, thank you, Rami, for that outline. So, I mean, in summary, a clear national payment strategy based around improving infrastructure and infrastructural resilience, improving financial inclusion, and accepting a significantly reduced role for cash in the economy. So may I please just turn to His Excellency Al-Arabi from the Central Bank of Oman, just to tell us a bit about Oman's approach to these issues as well. Are you in lockstep with Central Bank of Egypt, or do you differ in some elements? How do you see digital and fintech as it affects Oman?
Thank you very much, Phil, for having us and organizing this event also to Arab Monetary Fund. Now, obviously, we are almost implementing initiatives in the same trend like our regional countries. But the way maybe the experience is a bit different. What we have done as a central bank together with the banking community, we took this into a different maturities. When we came to introduce the initial payment systems in the country, we have done what we felt is important at that stage is to partner not only with the right vendor who provides a system, but also with a local partner who provides an immediate support, having the regulator at that time, when we talk about 15 or 16 years ago, know much of an experience in such modern payment systems. Now that as we get into the various systems and we see that automation is happening, our exposure in terms of what is right, what is wrong, made us also move and improve on the way we are handling the upcoming systems when we implement. We said, no, we will rely on our own resources. We said cost cutting is very important. And then accordingly, we moved towards having vendor internationally without a local partner. Now, it's all to ensure that we provide payment charges in terms of regulation to the banking community at a lower cost, and emphasize and keep emphasizing on that. Now, that turns for good when we came to the new players who entered the market, being the fintech. They are introducing not only added value services on top of the payment channels, but they are introducing it in a very low cost. And therefore, we advise the banks that we have to move towards that. Having a monopoly in payment channels is not anymore accepted, is not anymore a demand of the market. It's beyond security and fast movement of payment. It's that added value which the fintech companies are coming with to ensure that they are meeting the expectation of the customer. Customer being now an individual, maybe it's easy, but it's going beyond when it comes to a customer being a corporate with a wholesale and high value transactions. So as the central bank is moving towards adaptation of 24/7 retail systems, now we are also adopting into a 24/7 RTGS. We are being part of the regional initiatives, being Buna for the Arab, or even being effective member of the GCC initiative AFAQ. So this is giving us an indication how cost is very important into this. It's that correspondent banking, expensive rates is not anymore accepted by the customer. And we saw that demand becomes even more required in the pandemic time. And hence, everybody is expected to get the cheapest in transferring local transaction money or even cross-border money and remittance. I think I will stop in this stage.
Thank you. The theme is very much of improving resilience, improving efficiency, reducing cost, and adding value generally around payment networks is coming through loud and clear. I'm going to move next to Salvador and then to Dr. Saidovan. So, Salvador, Visa is a major incumbent in payments infrastructures around the world and indeed in the Gulf region. So you have a wonderful overview over it. What is your corporately your vision, your expectation over the next few years for retail payments in the Middle East, and potentially the roles of other forms of payment instruments, CBDC, stablecoin, crypto within that? Where do you see it going, and where's your planning?
Thank you, Philip. And let me very briefly also congratulate the Arab Monetary Fund, OMIF, for the forum, quite a valuable forum and a great opportunity to have this dialogue between the public and private sector. More importantly, having the two excellencies in this panel from two central banks that are really leading a lot of the public policy initiatives that we see to modernize retail payments, improve financial inclusion, and in general, build more resilience. So we are very pleased and honored to be able to join this panel. For Visa, it's very simple. We see ourselves as part of the financial infrastructure of any country, of the retail payments infrastructure. And this is becoming an increasingly crowded space from a supply perspective. At the end of the day, we all share commonalities and challenges and opportunities. Displacing cash is still a very significant challenge. The pandemic has helped a lot to change consumer behavior. But we still have a lot of challenges, and His Excellency Chairman Al-Hamidi provided 2 or 3 very clear thoughts about use cases for CBDC. And I think it's worth mentioning a little bit about our perspective in that respect. But to your broader question, Philip, about why Visa is sitting in this forum and why we want to talk about CBDC with central banks. We see ourselves under a concept of creating a network of networks. We need to enable and coexist with many other diverse payment infrastructures in country. At the end of the day, we are a global infrastructure present in more than 200 countries, and we need to be able to generate interoperability across countries and domestically. So we have a broader range of initiatives to be part of that discussion, to enable interoperability and improve, at the end of the day, what matters most, the resilience of the economies, and support consumers, but also small businesses in being able to participate in this space. So recently, the World Bank released a very interesting analysis about the challenges and opportunities in the MENA region under the term digital payment services infrastructure. We are part of that equation. We believe we are part of the solution, of the collaboration that we can bring with regulators across the MENA region to improve this. Let me comment on how crowded the space is, because what we are seeing with CBDCs is a very specific policy response to the emergency of crypto, right? Back in 2009, with the emergency of Bitcoin, the evolution of digital assets, and the decision from a public policy perspective to have a response in that respect, and be part of what it's now called the Internet of Value, right? Be able to transfer value peer-to-peer, permission-based or permissionless infrastructure across jurisdictions. We are providing use cases and thought leadership on how that looks like. And in the materials that we put together for this event, there are 2 specific papers that our group of experts have created on the CBDC discussion. One is the need to consider offline capabilities for CBDCs. Let's remind ourselves that in MENA and in many developing countries, we still lack a basic ICT connectivity, still not affordable and broad reach for the population. So we need to think about offline capabilities for CBDC. That's part of our proposal. The second one goes to what Chairman Al-Hamidi was highlighting, the use case about cross-border payments. We also want to be part of the solution. We have many initiatives with Buna. We are honored to have partnered also as part of their instant payment infrastructure to test other infrastructure that we have in place to facilitate that interconnectivity between instant payment systems in certain countries, and reaching out to our payment credentials, because we don't like to talk about cards. We like to talk about the payment credentials, close to 4 billion payment credentials that we have around the world, and where we are capable of providing that basic interconnectivity and supporting on the cross-border space. So 2 use cases that we want to put under the table to go very specific on the CBDC piece. And I don't want to take too much time to respond, but I know there are many other interesting things to talk about the retail payments in general, but I will reserve that for my next intervention. Thank you.
Thank you very much indeed. And yes, Visa certainly is an incumbent part of global payments infrastructure. And I think one of the themes OMFIF research is throwing out is the growing awareness of the need for partnership between private and official sectors in dealing with these payment issues. Central bankers are now, I think, starting to realize that they don't want to run retail banks, and that the existing retail experts are able to do that far better than central banks. And on the other hand, the private sector is starting to realize they do need the policy expertise of the official sector if this is going to happen as well. I just, before I pass to our next speaker, just note to everybody, there are a couple, if you go into the chat sections, there are a couple of polls, i.e. survey questions available just for us to get a sense of people's views. So if you have a spare 30 seconds to fill those in, we'd be grateful. I'm now going to pass to Dr. Seideman, as I say, Chief Executive of Giesecke and Devrient. Unique perspective, I think, Dr. Seideman, because you're working on CBDC digital monetary issues in all over the world and are very well placed to compare and contrast. My first question really for you was, if you look at the Gulf region, the Middle East, and think about its issues in comparison with, say, the Eurozone, what similarities and differences do you notice, and what implications does that have for policy going forward, particularly with respect to CBDC?
Yeah, thank you, Phil, for your kind introduction, and welcome to Your Excellencies and as well as to Mr. Perez Galindo on this panel. I'm very grateful to the Arab Monetary Fund and to UMFIF to organize this conference, which is just timely set because there's so much discussion going on and we could see so much acceleration of debate around that topic of CBDC. And allow me to open up that dialogue, circling back to the question that you asked, His Excellency Abu Naga, on the use of cash. And I think we have to, if we look at the data, cash is very much alive and kicking. In the last 18 months, cash in circulation worldwide has been increased 15 to 20%. Although we see what we call the cash paradox, it's not seen to be used more at the point of sale. And this spans the entire space that we need to debate that. Today, cash is the only public payment instrument, and a currency is more than just a payment instrument, since 80% of issued cash is actually not used for transaction, but as a store of value. And on the other hand, there are so many attractive private payment instruments that offer convenience, that offer additional functionality. And we see a strong market pull from e-commerce and also requirement from young people to use such an convenient instrument. And this is typically how innovation has been driven, from market pull and technology push. And we're in a fantastic, interesting time where we don't only see market pull, but we also see technology push with new crypto algorithms coming up, offering new opportunities. And we see a lot of use cases where the market principles itself may fail because we haven't reached financial digital inclusion. We have reached financial inclusion with cash, but financial digital inclusion is what we have to work on. And whenever the market is not enough to address this, it's time for the government to engage. And so far, cash has always been used as a benchmark for all other payment systems, and has created strong momentum also from competitive perspective. But if people use less cash, what is then the instrument to the central bank to balance this and to take care of the policies? And on one side, and on the other side, also, if the world becomes more and more digital, then what is the public payment instrument that people, as well as automated contracts or new digital business model, can use to settle without being forced to enter into a third-party contract? So I see there is a big value in CBDC if we design it well, if we design it in a way that it can address the person-to-person payment in an offline situation even, but at the same time is the platform that allows innovation, that allows the private sector to develop new services and develop new products, and where a lot of new business models are about to be delivered, where a currency of a state needs to be used in. And I think that is a fantastic space, and I look forward to discussing this with you, since we come from different perspectives, and but we drive one common theme forward to offer choices and to offer convenience for the public.
Thank you for that. I've got a technical question in here, which I think is ideal for you, Wolfram, from Brett Mollin from Ripple, to say, given the ones driving down a digital route, how important is offline support to a successful retail payment strategy?
Well, I absolutely believe that offline is a need for a CBDC. If it's to become a legal tender, we have to have a functionality that also works if the connectivity is down. And you ask about what is the difference of the different regions. And if you look at Europe or Middle East Africa, you see a difference in age. And that gives even a stronger potential for innovation in Middle East Africa. But you may also see a difference in infrastructure and financial inclusion, as we discussed it before. And also in rural areas, the connectivity sometimes is not at that stage, but you don't need to travel far. Even across the street here, I don't have connectivity in Bavaria. But in order to bridge that, we clearly need to have offline functionality for a payment system that needs to be universal and omnipurpose.
Thank you. You're right as well to emphasize that the policy imperatives for CBDC are different all around the world. There's not one size fits all at all, and indeed it's not even clear in certain countries that CBDC is required at all. So, for example, we see, interestingly, we see small countries, small island economies launching CBDCs. We see the larger OECD countries being actually very reluctant to do so. So I'd like, gentlemen, to because we've all skated round this one, to come to just some views on, with respect to the Gulf, the Middle East region, do we need a CBDC? And I'm going to start with His Excellency the Deputy Governor Al-Aghari, sorry for my Arabic, and then move around you to let's nail this one now, or as sometimes been argued, it is a little bit of a distraction, and one should be looking at upgrading existing RTGS and domestic payment systems hand in hand, clearly, with the private sector. Let me throw that open to you, starting with His Excellency and Al-Aghrabi, and then moving on to Deputy Governor Abul Naga, and then Salvador Wolfram, you can weigh in towards the end. So over to you.
Sure, thank you. The answer is yes. Yes, we require a digital currency. Now, obviously, the purpose of it from one country to another, from one economic to another might differ. The purpose is different. The advantage over that is different. But the answer is yes. We all can get a cost cutting in terms of printing notes. We can all get, with the right technology, a faster way of issuing a new digital currency norm. And also, in certain circumstances, if we have to withdraw that, then it becomes also faster of withdrawing in terms of any security breaches. Now, monitoring definitely will be in a better position as a regulator to monitor what is happening the usage of this, sometimes to fight also certain wrong behavior in the market, like hidden trades and black markets, becomes a more transparent system and automated process of even monitoring all of this. The real question remains what type of a digital currency we want in our country. We see today's currency represent and reflect a historical, proudness, if I may say, for such nations. We see political figures are represented in this. We will not definitely demand such a currency, whatever the norm of it, to oversee this. We will ensure that by us introducing a digital currency, though we are with the modernization, we will ensure that also such a digital currency is not a matter of digits, but it's a matter of a norm will continue reflecting that pride in our nation, and that is what really regulators need to focus on. We should not rush just because of such a country has implemented a national digital currency, but we should go into it with a clarity what is our national strategy to ensure the continuation of certain features that today is presented via our physical notes. I think that is what really matters, rather than whether we need it or not. We are beyond that now. Yes, we need it. It's just a matter of how we should implement it. Over to you, Phil.
Well, thank you. And that you've introduced a very powerful element into this debate. There are those who would say that the state has a sovereign duty to enable citizens to pay with a sovereign currency. And I have to say, even though I'm chairman of something called the Digital Monetary Institute, money for me has to have a picture of Her Majesty the Queen on it to be absolutely guaranteed. Then I know it's okay. And you make the point very well about history, about tradition, about the trust of the people. And indeed Sweden, which of course has led the way in moves towards a digital economy, and 97% of transactions in Sweden are digital. However, 3% of citizens say no, they want to have cash, and they wish to transact in cash. And Parliament has backed them and said there are certain types of retailer who by law must accept physical cash. So I wonder whether you will be obliged to maintain physical cash alongside central bank digital currency, and do you have a strategy for dealing with that, or will you look to persuade citizens that actually the digital stuff is just as good as the physical stuff?
We see from the figures and from the data that definitely there is a demand for digital transaction and e-payment. There is a demand on the e-commerce. In the last 5 years, we see that figure increases to 400%. We see the various retail systems every year almost doubling the volume of the transactions. So absolutely, there's no question of the adaptation. We see it's day by day that the adaptation in terms of e-payments, it increases. However, we see also that there are certain issues and challenges remains, and obviously depends from one country to another in terms of the telecommunication infrastructure, whether this is making e-payment smooth or no. Now, again, what what really emphasize on the adaptation, the government and the private initiatives towards e-payment, and whatever is provided and whatever is mandated as services also to be made in electronic manners. The cash remains. The question for how long, the question to what extent remains, depending on certain factors. As we said, the telecommunication, the initiatives of the government, the trust over such channels, the cyber crimes, all this will definitely, make the behavior of the market accordingly, whether to the positive side or the negative side.
But I'm getting the sense from Oman that the national policy says this is not a question of if, but when, and we need to be thinking about the implementation and rather than the principle. Dr. Abdelnager, I mean, from your introductory remarks, I infer that you would like to get rid of, if you could, with a wave of your hand, get rid of cash overnight, you would do so, and that therefore this is not an issue, but maybe I'm being presumptuous.
No, Phil, you're not. This is definitely something, I mean, that we would aspire to achieve. But realistically speaking, again, the dynamics in Egypt might slightly differ from those in Oman, given the size of the population, the size of the informal sector in Egypt. These are all challenging aspects that have definitely weighed on our ability to unfold and to progress quickly. These are the real challenges. The culture, the awareness itself, all of these are factors that have been identified as impediments to our ability to shift and migrate to a less cash society. So we've definitely identified where these hindrances reside, and we're looking at all of them and trying to tackle them. But there's no doubt that what my colleague, His Excellency Mr. Al-Akhbari, mentioned about the importance of a retail Cbdc is something that I also echo. I mean, if we think of it as a digital currency issued by central banks for use by the general public, households, and for the businesses and P2P operations, e-commerce, in-store, then as a legal tender, then there's no doubt that a retail CBDC would enhance financial inclusion. It would improve the domestic payment system, and it would streamline the retail remittances. However, it's too early to judge in Egypt's case because we are still studying the issuance of a Cbdc and its implications in cooperation with international consultants that we are using to help draw a sort of a roadmap when it comes to a CBDC. But again, obviously it would provide an official and trusted and low-risk alternative to private digital currencies such as Bitcoins and other types of cryptos, which are highly characterized by anonymity and all the issues that we definitely dread in this dark web sort of environment. So a CBDC system may be considered the real-time insight on the economy, as also mentioned by His Excellency Al-Akhbari, that would help central banks, especially in monetary policy and financial inclusion adoption. It's a key tool and key element that will help us improve the monetary policy transmission, given that you will have more insights on the economy, on the transactions, on the sectors that are economically active versus those that are less so. So it would help you make more informed decisions. It will help enable you to make better and more targeted decisions. So the more there's reliance to on digital payments, the easier the job of a regulator and a monetary policy agent becomes. So in our view and in our opinion, we have mobilized all the efforts to try to rid ourselves of cash, which is still heavily used in Egypt. We have a cultural impediment because in many cases, people are a bit anxious and too overly sensitive to the tax policies. So they would rather use, stay out of the financial sector and remain financially excluded, because that way they think they would not be in reach or on the radar of the tax regulators, and that way, they make themselves a lot more comfortable than they think they would otherwise be, which is also something that we're trying to change. So having a system, having the infrastructure is key, but more importantly, the cultural awareness is also important. So what we're doing is that we're trying to raise awareness about the benefits of having access to financial services, the benefits of having an e-card or an e-commerce platform for your business. These are all aspects that are helping us onboard more and more citizens every day, especially at the smaller segments, so the smaller market caps, so the microfinance level, the SME level. These are all sorts of target groups that we are trying to reach out to and to include in the system. Many of them were either excluded as a conscious decision because they were actively trying to evade taxes, for example. Others because they did not have the awareness about the benefits of how they could scale up their business if they had access to financial services. So there's no doubt that if we do have a digital currency that is supported and endorsed by the regulator, and the more adoption we have and usage we have for that digital currency, the more visibility we will have, the better analysis we will have, and the better the policies we deliver are also going to be. So it's an entire ecosystem that we have to all consider whilst taking these decisions. So anything that will help us, help the society have better access to financial services, we would definitely not hesitate to use. And a digital currency or a CBDC is definitely one of these options that we are highly considering.
Yeah, thank you. And this will follow on to a couple of questions that have just come through. You mentioned earlier one of the big distinguishing features of Egypt in the region is the size of your population. And some of the differences in society. So a couple of questions relating to that. One from Hemraz Yanki, who's at the Central Bank of Mauritius, which is, assuming you're rolling out CBDC, how do you gain the public trust in CBDC? And similar question from colleagues at the Arab Monetary Fund saying, how do you reassure citizens that this is not just some electronic vaporware, but has that backing of the state in the same way as if I have a Bank of Oman or a Central Bank of Egypt note in my hand, it is legitimate tender?
Sure. So in our case, since we haven't adopted one yet, and this is something still that is under consideration, but I think if we decide and if we opt for a CBDC, then there are a few things we need to do. We need to, it has to have obviously the legality and the legal tender and status that is clearly and transparently endorsed by the government and obviously the central bank. It has to have a constitutional, an underlying constitutional legitimacy, and that has to be well communicated. On the other hand, from a technical perspective, it has to also be easily and highly operable and easy to adopt. I think if you have both of these, you are at the right starting point. But then you also have to ensure that there is a broad acceptance of that currency. So you have to start to promote the adoption of that CBDC across different retailers, wholesalers, government entities, service providers. So the more they shop around and they see that this currency is well accepted and well traded, the more comfortable they will be about using it. Equally important is the confidentiality. I think it's important that they feel that whatever they are using this currency for is well protected in terms of privacy and in terms of the confidentiality of the data that's being exchanged. Because at the end of the day, as you mentioned, at the heart and at the core of matters is a trust issue. Like you've mentioned, Phil, you're not comfortable, and this is something that obviously this is a legacy that will not change overnight. But for you, and in the case of the 3% in Sweden, people want to see some people are only comfortable using banknotes. Like I'll use what the statement you made. You need to see the HR, the Regina's, the Queen's picture on that note so that you feel comfortable using it. In Sweden, there is definitely a strata in the society that is still only comfortable using cash. So the trust is not something that will happen overnight. It's something that will need a lot of fostering before it becomes a reality that people accept.
Thank you. Yes, I mean, my 23-year-old daughter doesn't know what cash is. I mean, money is something that resides on a smartphone, whereas for me, as you say, if it's not cash. And there is a big issue, certainly in the research we've done in the United Kingdom, very, very, I mean, we've got an expert gathering here today. We can talk about M0 and M1 and private money and public money, and we all know what we're talking about. The vast majority of our fellow citizens don't. And the most common query we do here in our research is, well, why do I want a CBDC? I've already got digital money from Visa, from Barclays, from whoever. Before we move on, the question for His Excellency Deputy Governor Akbari from Andrew Turner of Fidelity, who's saying, you mentioned innovation in financial services being part and parcel of the central bank strategy. And to what extent did you see programmable CBDC as being a major advantage in your strategy?
I think, we have done the major thing, which is introducing electronic payment channels. Now, definitely, the young generations will not, be as such sensitive about reflecting whatever I have mentioned in terms of the traditional and again the political figures and all that, and therefore us introducing a digital currency becomes in the same norm. It is just how we reflect it in the ecosystem to replace the digital money already available, which is backed by a physical money available in a pool account. So you just withdraw this and replace it by a digital currency. At least this is in my opinion. If Central Bank of Oman is to implement a digital currency, then definitely this is the way we will approach it. It becomes much easier. Now, obviously, the trust over it, we have used and we have good examples of how the adaptation comes even sometimes by force. We see that, for example, the Royal Police, where they came and said now it's mandatory to obtain any service to pay by POS or by digital means, and therefore even the old generation are adopting because they have to get their service done. So it's in the same manner. We can always introduce it. And if it has the support of the central bank, then it becomes easy in terms of the adaptation. And that will be, our approach towards moving forward in terms of improving the payment adaptation in our country, and also the adaptation of such a digital currency if it comes in place.
And do you see programmable CBDC as being part of that thinking, or is it a step too far at the moment?
Still, even within the central bank, there's various internal debates on how we're supposed to handle it. And definitely, I'm representing my own voice, but you will see also the other side who is saying, do we really need it? That is also a genuine question, who, again, the central bank is trying to find out.
Yes, well, yeah. Yes, as His Excellency said at the beginning, there are probably more questions than answers at the moment, but I know a man who can answer them, who's Salvador. A question that's come up, and indeed in my mind, we're moving towards this idea of public-private partnership in developing and rolling this out. Could you say some more about this from Visa's perspective? Because I know you've been doing quite a lot of unheralded public policy work in many parts of the world. Indeed, I had the pleasure of hosting your chief executive, Charlotte Hogg, recently to talk about some of this.
Philip, and I agree. We have all more questions than certainties in this space. Just a quick comment. I want to comment on the interventions from His Excellencies, because I think it's very important that there is a very thoughtful process when designing a Cbdc and engagement with the private sector. We see a trend, unfortunately, in some countries to rush and start piloting a Cbdc without the thought process. What's the use case? With whom we should be partnering? Open a public consultation. It's very important to start with that piece, that we have public consultations with the industry, with the banks, obviously, with the fintechs, so that there's really a more thorough process and analysis on how to build the use cases that are really needed for a specific country. I don't think there's a one-size-fits-all approach to CBDCs. To your specific question, the reflection, and in Egypt, we have plenty of good examples of public-private partnerships. In Oman, we want to pursue them as well. And I want to address the nature of payments and why these partnerships are so important. Let's remind ourselves that we're talking about two-sided markets, right? The supply is there, a lot of players bringing new solutions, the technology is there, but at the end of the day, we depend on the demand from consumers and merchants. And how can we shift behavior? I couldn't agree more with what Deputy Governor Abulnaga was mentioning about the old and very ingrained challenge of informality, which can be a third or a fifth of GDPs in the MENA region. So the only way to address that informality and convince consumers and businesses to move to digital payments is basically by partnering together. Pure regulation, pure technology won't change that. So there's a lot that can be done in that space. Important to take into account the consumer experience, right? What exactly are consumers looking for? Is it a P2P solution? CBDC is a natural one, but e-commerce, it was mentioned before how important it is. Is it going to be a friendly solution? Is it going to be available for cross-border e-commerce, which at the end of the day, it's driving a lot of the activity these days. There are many questions on what specific use cases we want to do. If we go to the merchant side, what does the merchant want to solve for? We were mentioning before the importance of bringing value-added services to the merchants. They don't want just a payment method. They want to have the intelligence, the capability to manage better their inventory, to ultimately bring more clients, to have campaigns marketing, mobilize consumption into their outlets, CBDC alone might not be that attractive. Who can provide that marketing, that awareness in the population altogether as an industry? And I'm just highlighting some of the basic examples on why this is not an issue of competition, but collaboration at the end of the day, and competition, right? The mix of competition, of collaboration. We might have very different platforms, business cases, but at the end of the day, we need to work together with a common cause, which is improving the infrastructure, and more importantly, bring interoperability and friendly solutions to address the two demands. If we don't do that, I suspect CBDC will be just another solution where we are still trying to crack the code to really make a transformational impact in our countries.
And do you think CBDC is the solution, or can you do it better via upgrading existing technology?
I think there's no question that CBDCs will have to be part of the infrastructure. It's up to each regulator to decide if it's worth the effort, not to us to decide if a country has to go for it or not. But the guidance from the BIS is very clear. There has to be some type of infrastructure. The devil is always in the details, right? Where specifically you want to do it, wholesale, retail, and what use cases you want to do. So we have no doubt that this is coming, and we just need to collaborate and see where there is common ground to address the specific use cases that we want to solve for.
Thank you. Wolfram, I know you've been working as well with a number of central banks and countries around the world. So presumably you agree with the view that CBDC is inevitable rather than possible, even with let's say the ECB, the Bank of England, and the Fed being slightly reluctant to move ahead with it?
Well, although they are very active investigating, so clearly we heard already many objectives what CBDC could help to achieve, and in my opinion, the two major ones are to really achieve financial inclusion and to drive the digital economy. And if well designed as a platform for innovation, which allows users to deal with CBDC using different rails. CBDC could run on a Visa rail. CBDC could be used in a social network. But the platform, the base infrastructure, the standardization, and with that, the potential for a huge network effect that can drive efficiency of the payment sector. And I truly believe that it's the right time to look at it, but to carefully choose the right technology in order to achieve that full span of use cases, as I already indicated before, from offline person-to-person payment up to the opening of new markets where the currency could be used, and not creating a fragmented patchwork of individual new digital business models, which always use their own barter system, so to speak, to transact in, but to offer the currency to be used as a standard in the digital economy. If we achieve that, and there are strong concepts that show that we can drive it that way, then we really add value to society.
A couple of questions here that are very much up your street, Wolfram, around infrastructure. So Central Bank of Nigeria and indeed Joseph Milner, Director of Currency Management at the Reserve Bank of Malawi, asking what core infrastructure, in addition to what we already have, would you need for a CBDC, and is the best way to acquire it via outsourcing it or buying it and doing it yourself, or indeed calling you?
Well, such design CBDC, as I just created that vision, requires a minimal base infrastructure that the central bank needs to operate to allow participants in that ecosystem to verify the authenticity of the digital currency. And that is a simple infrastructure that's, well, simple because it needs to be redundant and it needs to be very secure. So there are, of course, challenges, but that's the only part, because other than that, we can use existing infrastructure. We can, of course, use the existing infrastructure between the commercial bank sector and the central banks. So envisage the same. If today a commercial bank orders cash, they'll get it delivered with trucks and book it in the cross settlement system. If in the future a commercial bank orders digital cash, CBDC, this will be supplied through a communication channel where even the internet can be used, and the same booking system can be used as well. And as I also described before, we can also use a lot of infrastructure that already is in place by the financial sector and fintechs or other private schemes, where a piece of software needs to be integrated in their wallets that would qualify to be a wallet for CBDC. And by that integration, we can use a lot of infrastructure and create a lot of new business models and new business cases, because these wallets can have a logic and can be smart wallets that can be integrated also in DLT and automated supply chain.
Thank you. So let me move that on. You've raised very important points about the role of a CBDC in a financial ecosystem and infrastructure, and we put forward a vision of multiple currencies, multiple payment networks operating in symbiosis, both nationally and cross-border. So my question now for the panel is, does all this represent a challenge to existing national financial systems, particularly the banking system, or and is terribly disruptive, or is this a great new opportunity? So, Dr. Abulnago, how do you see this?
I see it as both. It depends on how you will deal with it and how well prepared you are, and to what extent you're constantly updating yourself and making yourself abreast with everything that this can bring to the system. Honestly, we think that there is a great opportunity that lies within this. In Egypt, just to give you a sense of the demographics, we have obviously the population is now north of 100. I keep going back to the population because this is a key driver of how we shape our policies. 60% of which are 30 years or younger. So it's a very young population, very tech savvy, very dynamic, and very modern. So it's easy for them to adapt technology. But at the same time, you have to ensure that they have the right ecosystem that would help foster such a development that does not become disruptive, as you have rightly underpinned. For us, we think that it is important to have the right elements in place. We think that using and collaborating with the non-bank players in payments is also a key opportunity for the market. At the CBE, we have set this as a collaborative effort between the banks, between the financial institutions, and the non-banking institutions as well, to achieve a digital transformation and obviously increase financial inclusion. We considered the fintechs and the banks as a great area of cooperation, not competition. We thought they can complement each other. And we issued a lot of regulations to assist in non-financial players to work with banks in the payment industry. Some of these regulations are related to the payment facilitators, technical payment aggregators, the third-party processors, and of course, all of these types of payment service providers are working with banks on facilitating electronic and digital payment acceptance for merchants and various enterprises. So the collaboration between banks and these entities succeeded to increase the digital acceptance points from only 72,000 to 700,000 POSs and 400,000 QR codes in Egypt in a very, very brief period. So we definitely view this as an opportunity. We have also taken some, and allow me to share some of these steps, which we think were quite significant to promote the fintech industry, like Salvador and Wolfram were mentioning earlier. It's important to use the tools you have in the market as enablers. So for us, all these fintechs, all these young budding enterprises, those tech savvy entrepreneurs are definitely an asset that you need to capitalize on. And with that in mind, we developed a regulatory sandbox to support and incubate startups, and obviously all new innovative ideas. We had also directed the banks to establish a fund, primarily earmarking 1 billion or dedicating 1 billion Egyptian pound capital to strengthen the entrepreneurship environment and to empower creativity and capacity in this regard. And we also established a Fintech Hub that is going to be and act as a unified platform driven by innovation and technology to foster and connect all fintech ecosystem stakeholders, including the fintech startups, the financial institutions, the regulators, service providers, mentors, investors, you name it. So with that put together in one context, where we are definitely very cognizant of the threats that lie ahead, makes us think more of this as an opportunity and to help, continue to leverage on all the tools that are available, the demographics and the infrastructure that we have invested into. So it's definitely a threat, if not, if we are behind the curve, if we are not ahead of matters, and we in any way live in denial that this is something that we can avoid.
And just very, very briefly, concerns have been raised in a number of quarters that if the central bank starts offering citizens bank accounts, they will quickly move their deposits from the private sector to the public sector. Is that a concern?
Well, there's definitely a lot of, it's an issue, especially when the central bank is a credible central bank. It has a lot of leverage and it is well regarded by the market and the different stakeholders. So this is where you have to try and to create a sort of a framework where this shift doesn't happen. So you can try to operate a system that is managed from a holistic perspective by the central bank, yet it is perceived as a tool and a service provided by the banking sector. So it's a very tricky and it's a very good question. We're still trying to grapple with other experiences and how to best ensure that you do not cannibalize and you not crowd out the private sector and the bank. So it's definitely a challenge, but I think there are many ways out for that. And we are actually very intrigued with this issue and trying to study different models to best deliver on a service and a product that does not disrupt the existing environment.
Yeah, small deposits and zero remuneration seems to be the policies advocated in most other parts of the world. Dr. Al-Akhbari, could I just move to you? A question here from one of your peers at the Central Bank of Kuwait. They're asking, how would the supervisory function for CBDC differ? What would be the oversight framework? Would it be any different from what you currently have?
It's definitely different. The question how, that details is yet to be found out. It's all depends on the model that we are going to adopt, and again, how we are going to introduce it and via whom also. But there's an additional expertise, skills required to ensure that the supervisory role is not neglected, because at the end of the day, that's what you are trying to obtain is a better level of supervision, better position to ensure that there is no misuse of the traditional cash available within the market. Definitely, the central bank resources has to be up to the level to ensure that there is a proper way of supervising such a digital currency in the market.
Thank you. I think the regulators play a very, very important role in this. We're coming close to close. I would like to thank Your Excellencies, Deputy Governors, very much for your contributions. And we'll leave the closing words to the private sector, Visa and G&D, just to say to us, we've heard a very, very compelling vision outlined here about a digital gulf, interconnected, cross-border CBDCs and multiple payment systems to be rolled out in the coming years. Can I ask you briefly just to say, what do you think are the biggest challenges that we have to overcome to get there? Salvador, can I start with you, please?
Sure, Philip, and I will mention 3 or 4 challenges to be very brief. It was mentioned before the importance of trust and confidence. That's a very important one. It's ultimately associated to providing security and privacy. Distributed ledger technology in itself won't solves for one, but not for privacy. So that's an important part that has to be solved for. Secondly, the development of ecosystems. This is not, as I mentioned before, just a pure technological proposal. Is how we develop the ecosystem altogether, involving fintechs, banks, non-financial institutions that are already active in the payment space, and ultimately solving for the linkage between payments and bank accounts, which is already happening with open banking, right? But how can we solve for here with CBDC? And that takes me to the third one, which is interoperability. I emphasize the cross-border piece for obvious reasons, but also domestically, how CBDC will coexist and will allow in a single wallet or in a single point of sale terminal, the possibility to coexist with all the different means of payment has to be addressed. So those would be probably the 3 main challenges that I would conclude.
Thank you very much indeed. Wolfram, last word to you, please.
I subscribe what Salvador has said, and I just want to add that to build a new ecosystem and to build a new form of money is something which we should not do disruptively. And I think we are all clear about that. And that means we need to design jointly an ecosystem that adds value to society, that caters new business models, and develops our economy that goes more and more to the digital space. And here there are multi-layers of discussion relevant. Which participant will take? It's a political discussion also on privacy, on how to deal with data and how to design parameters of that CBDC is not only a financial system topic, but also a general policy topic. And last but not least, to design the technology right, which enables all this, and not to look for the best application of an existing technology, but to really adapt the technology to the needs and make it also future prone. So we have to look into the cyber attacks of the future when we design the currency of the future. And this is quite a challenging task ahead. And I also subscribe that in a private-public partnership, most probably it's the best way to move that forward. But it's a great chance, and I look forward to that journey together with you.
Thank you very much indeed. I have to say, I'm immensely grateful to all four of you for your contributions. This is a vast and complex subject. We barely scratched the surface, but there's been some really great insight. I'm very grateful to all four of you. So on behalf of the Arab Monetary Fund and of OMFIF, I would like to thank His Excellency Rami Abul Naga, Deputy Governor of the Central Bank of Egypt, His Excellency Badr Al-Aghabi, Vice President of the Central Bank of Oman, Wolfram Seidemann, CEO of Giesecke & Devrient, and last and certainly not least, Salvador Perez Galindo, Vice President of Visa. Thank you very, very much indeed for an outstanding discussion. I hope we do a replay at some time in the future and see how we move on. Thank you to the audience. We're now moving to a quarter of an hour break for coffee and pastries and whatever, and we restart. There is a presentation on technology solutions at 13:45 London time, and then we're back at 2 o'clock London time, 5 o'clock Abu Dhabi time, for a panel looking at the evolution in Arab financial markets and the next steps for legacy systems, and that's being moderated by Mr. Habib Attia from the Arab Monetary Fund. So thank you to our speakers, thank you to our audience, and enjoy the rest of the conference. Bye.
Thank you.
Thank you.
Thank you. Bye-bye.